Welcome back, everybody. Today I'll be interviewing Charles Reid again. Some of you may remembered him from an interview I did about a month or two ago. Today we're going to be talking about a brief update in the DeFi space and a number of other topics which I'll cover over a series of 3 interviews, or one interview split into 3 parts, so it's a bit more digestible. So in this first part today, we're going to talk about a basic update in the DeFi space, as well as, I guess, lessons learned from 2017 to now, and maybe how this is a bit different. The DeFi sort of, run is a bit different, and sort of what we're expecting to see in the space in the next 6 months. All right. Okay, Charlie, well, welcome back. And thanks for talking to me again. It's been a hectic couple of weeks since we last spoke on the channel, but obviously we've been speaking offline since then. But why don't you just fill us in a bit about what's been happening in the DeFi space over the past, 2 or 3 weeks, because it has been nuts.
Yeah, indeed. So we sort of, touched on it last time we spoke, which I think is probably nearing 6 to 8 weeks ago, and we talked about how that was kind of the emerging narrative, and then I think that was off the back of sort of lend success, and then we saw Compound come to market, which obviously is a governance token, and it listed on Uniswap with very low liquidity, a very low price, still significantly higher than what the VCs paid, but it ran all the way to I think $440. So I think what that did was that ticked off this bull run around DeFi and governance tokens and yield farming. So there's two main channels. There's people who are farming yield for good returns on their stable coins, and this can be gamed as well, if you use leverage and such. But then there's the other side of people, like myself, to be honest, who most of the time when I'm yield farming, it is because I know that the protocol is going to drop a token, and it might be worthwhile. So that was kind of like Compound, then Balancer listed on like a 30 or 50x, if I'm right. And that was people who'd been using Balancer to, as offering liquidity. That was an incentive. And then, we saw Metastable, which was ridiculous. The auction, I tried to place a bid probably for close to $500,000, not just my funds, of course, but close to $500,000 at $1.60. The listing price was 15 cents, and we didn't fill a single token on Metastable. And that just goes to show the demand was all $2. Well, the average fill price was $1.80. So I don't know how we didn't fill anything, but that shows there's this huge FOMO into governance tokens. Now, that's good and bad, because governance tokens are really interesting. I think they're a natural progression from utility to actually owning a piece of the protocol and to being able to vote on changes and the direction that the protocol goes, and actually being a decentralized network that's run by the participants. But of course, there's a lot of people who just want the tokens, not to vote on things, but to speculate. Now that does drive in interest from smart players who will actually use their tokens to vote and to. Yeah, so it's been a really crazy few months. And we've seen all these new governance tokens. We've seen projects from 2017, 2018 rebranding as DeFi. There's been a few of those. Also, we're launching a DeFi network. I think we'll see more of that. It's funny because crypto at its core is kind of the building blocks for decentralized finance anyway, but it's just this narrative that's taken hold and people love it. So yeah, it's been a crazy few months. Personally, I don't see it slowing down anytime soon.
Yeah, I think we've still got. I think there's. I don't think that's crazy greed has really kicked in yet that we saw in 2017, 18, where it's just nuts. But the interesting thing, and we did talk about this earlier, is I think that for the most part, the market participants, the amount of market participants is a lot lower this time around. Like, I feel like it's a much smaller group playing in the playground at the moment. and then we're just waiting until it starts to get a bit more mass market, and then that's when you've got about 2 months of insanity, and then it all falls apart again, assuming it is a bubble. Because I think the one interesting thing for me with a lot of these DeFi projects is that, and I think this is actually coming from you, is that obviously the ICO craze was where people paid money for tokens, whereas companies gave you tokens for money and then would build a product later. Whereas the current trend with DeFi is that a lot of projects have already built a product, and then they're basically giving you tokens for using it, which would be the case of comp. Like comp, you can either buy the tokens or you can, and I think Aave do it as well, or Ethland or whatever. I think if you participate in the network, you get a cut of tokens.
Yeah, so you own a piece of it. It's like owning a piece of software, which is kind of what the early Ethereum ICO standard should have been about, is owning a piece of software. And I think, you're absolutely right that the actual participant pool for this bubble that we're experiencing is tiny. Now, I know I have it on good info that a lot of the big traders on Twitter don't know how to use Uniswap. They don't know how to use MetaMask even, which is crazy to me. But and we talked about this earlier, and I find this really funny. Is there was this whole "in it for the tech" meme where people are like, "Oh, if you're in it for the tech, you're a moron. We're all here for the gains." But now, funny enough, the people who were actually in it for the tech, the people who are a little bit more savvy with DEXs, with these lending protocols, they're the people who are making more money than you. So while you were so desperate and greedy to make money during the last bull run, if you actually kind of learned about where the direction things were going, because this was kind of set in stone already. If you look at some of the smarter investors in the space, what they were putting money into 18 months ago when everyone else was having a break, it was these lending protocols and these governance-led platforms, which but basically allow the user to determine the direction of the tech. So I find that really funny. I find it's like kind of ironic after all the memes, and now I know a bunch of traders who can't even use Uniswap because it doesn't have charts and they don't really know how it works.
Yeah, well, I had someone actually. I got an interesting one today from I can't name names, but I saw it and I was a bit like, and it basically someone said that is in the industry, said that DeFi is mostly scams or securities, and I was like, I was trying to, because I've heard that a few times now, that saying that this DeFi thing is another craze, it's all bullshit, which I disagree with, because there's actual utility of a lot of these projects. Now, do you think that there is a risk that some of these DeFi projects, especially because what's happening, you're earning an interest rate, so you're in joint, well, you're not really in joint profit with it's a bit of a grey area because you're not really in joint profit with the platform, that some of these could be maybe classified as securities as opposed to because it's sort of on that grey area between utility and between security.
What's funny, and this is something compounded very, very smart. You can't have a token burn mechanism, right? That makes you pretty much a security in the eyes of most lawyers. So what do, right? You decentralize your protocol, and then you get all the VCs who have a lot of tokens to vote in a token burn, because you didn't incite the token burn. It's a piece of software. So what you've done is you've created a protocol, and then you've left the direction it takes up to the participants.
Yeah.
And once it's sufficiently decentralized, how can it be a security? What can the SEC do? I mean, they can make it very difficult.
There's no one to prosecute. There's no office. There's no human being. It's a totally decentralized autonomous organization.
Exactly. And that's why you have so many DAOs. And, funny you say that, because that's why you have so many DAOs that now run projects, because you can't do anything if they do decide to vote in a token burn. Now, what they can do is make it very difficult for the people who initiated that protocol to, have access to financial instruments, and they can make it really difficult if they want to. But with things like Compound, it's really smart because they've just initiated in they've cast a vote, or one of the VCs cast a vote for a token burn. Now, obviously, everyone's going to vote for that because you're increasing the token value by making it more scarce.
Yeah.
So I think, some of them, yeah, probably. I mean, some of these centralized finance products like Nexo, they've had some gray area because they are backed by, a traditional business. And that's like, they're offering DeFi returns, but it's very much kind of a centralized business, and they operate as normal. So it's interesting. I think there will be
operating more like a bank then.
Yeah, and you can do that with smart contracts, and I think Nexo actually are pretty much in the safe now, but they're an incredibly well-established business with a very successful token and a very successful team behind them. So the team know how to navigate this stuff. A lot of the smaller teams who don't know how to sufficiently decentralize, how to run a DAO, how to set up using a DAO, they will end up probably getting burned. But I think honestly this thing is too big now to stop and to slow down. And the SEC is, you can stop a utility token because it's one company with one business with one token and one, whatever they're offering. But what people do now, even with utility tokens, is they have a foundation, and then that's separate from the company, and the foundation and you'll have the foundation which kind of guides things. And that's a very, very common model in crypto now, to have the foundation and then to have this central authority which says we're nothing to do with the token. We just we build technology that works on that network, for example. So this is the case with Tendermint. Even Ethereum now has a foundation. Sovereign was run with a foundation, loads and loads of them, and it makes sense because it's how you bypass being associated directly with that token, which could be a risk.
So earlier you mentioned about token burns. So just explain how a token burn would how burning tokens would make something more like a security than if there was no burning of tokens.
Yeah, so it's a kind of a legal grey area, but the consensus really is that if you're saying that you're burning tokens using profit, it's kind of like a stock buyback in that sense. So what you're doing is you're saying, oh, if we do well, we'll buy back our tokens. And that's really what you're doing. But with the burn, you send it to the Genesis address, and the tokens are lost forever because obviously no one has access to that. So you're effectively reducing how many tokens are in circulation, and therefore making it more scarce, and
then
kind
increasing
of
the price.
insinuating that you're insinuating that these tokens are worth more because there's less of them, and that is something that is really heavily frowned upon, and a lot of companies have got in a lot of trouble for doing it. And even Binance do a quarterly token burn. They buy back using profits, but they've actually deleted their white paper from their website. And if Binance were based in the US, that would have gone very badly for them. And a few others have been just straight up told. Some of my clients wanted to do token burns and they can't.
So that's that's an interesting one. So where do you see the space? I mean, not specific projects. We'll get onto that next. But where do you see the trend in the space happening over the next, say, 6 months?
Well, like I said, and like we've kind of alluded to, I still think that the participants in this pool that we're dealing with right now, and it's such a small pool of people, but it's an echo chamber, so it feels like this is going to burst any minute, and it is exceptionally bullish. Some of these charts are like full parabolic trends, and it's amazing to see because it is very reminiscent of 2017, 2018, but not many people are catching these trends because a lot of traders are trying to trade Bitcoin hasn't moved. I mean, it's barely moved at all. The majors aren't moving. The value is in the dexes, it's in the low caps, it's in being ahead of the curve, understanding who's who and what they're looking at. So I think that trend continues for probably the next few months. There's a lot of really interesting projects, and then I guess we see this kind of consolidation where people start building layer 2 tech on top of some of these protocols, and combining them even to create automated yield farming and things like that. And you spoke about that earlier, that having very simple tools and analytics for people to kind of tap into that DeFi market is going to be really, really powerful.